Hello traders and welcome to the Technical Trader. Today I'll be talking about my trade setup this week and I'm looking to trade three stocks: Apple, Mag Silver Corp, and HYZN Motors. This video is for educational purposes only. Let's start with Apple and the 4-hour price chart. What we see here is the price stopped at 157 and formed this peak. Some could consider this to be a head and shoulders pattern, meaning this is the left shoulder, this is the head, and this is the right shoulder. We saw the break confirmed at 147, but as head and shoulder patterns go, the price should have dropped to 137, meaning we didn't see that yet, but we could potentially. However, what we see here at the right of our chart, we see a bullish engulfing pattern, meaning this white long candle had fully engulfed this red bearish candle. What we also see, it's a wedge pattern, falling wedge pattern, and this is confirmed by one touch of the wedge, 2 touches, 3, 4, 5, 6. Typically 6 touches are enough to confirm the falling wedge pattern, which is a bullish pattern, meaning the price could potentially break to the upside. What we see here potentially is that the price, if it breaks higher, it could easily reach this price zone 147. How would I trade this chart and this stock this week? Well, first, I'm really thinking that 140 is a really good support zone because 140 is a round number, and typically round number hold as a strong support and resistance zone. Also, we have the bullish wedge pattern and the bullish engulfing pattern, which means the price may likely reverse at this point. Also, what we're seeing here is that the MACD is turning and converging with the previous low. So we're having a lower low on the price than this one here, but the MACD has had a higher low, meaning this is converging. Typically 2 or 3 convergences are usually an indicator of a full reversal. So how would I trade this setup? I would set a buy limit order somewhere at around 133.30, meaning above the white candle. And if we see in the coming days, maybe Monday, Tuesday, potentially, see the price push through 133.30, I would hold it to 147. That would be my first target take profit. If it reaches $4 above the entry point, I'm out. My second stop loss zone is 155. Why 55 and not 57? Because we see here that the price zone is more congested here than the one touch over here. However, eventually I'm pretty sure the Apple stock will reach 157, 160, 180, even higher, but I'm talking about the short-term trades in the coming days, potentially week or two. Of course, Apple moves slow, so this trade could take a little longer to fulfill, but we'll see. Maybe I will go out and take profit earlier than that. As far as stop loss is confirmed, I won't be waiting to the price to reach 137. I would probably set my stop loss somewhere at around 38.30, which is somewhere slightly below this candle wick, the bearish candle wick. If I consider that the price may go higher, I may keep some of my positions, sell it later, or I will just sell everything in this price zone, as I said. Let's see Mag Silver Corp. Mag Silver Corp is a Canadian mining company which has most of its operation in Mexico. And aside from the fact that silver has caught the interest of many traders in the past months, including Wall Street Bets Group and Reddit, I'm looking at this company and this stock purely from a technical standpoint. So instead of the 4-hour chart, we'll be looking at the daily chart here. And what it shows is a bullish descending channel. This is a bullish pattern, meaning that the price typically goes lower after the previous going high, and then it starts going lower. Just some people are taking profit, some other people are entering at a potentially better price than if they could enter before. This is what usually causes this bullish descending channels, but the price typically has to break the higher trend line to be confirmed. If we see a break of the $19, potentially $18.50, then we could easily see a move up to 23. But before that, there's another way to trade this descending channel. As you can see, the price bounces around 2 trend lines. So channels could be traded every time they touch. For example, you buy here, you exit here. Of course, this wouldn't be formed as a channel at the beginning, but you could do it at the second or the third touch of the channel. So this is a third touch, and not only this is a third touch of the lower trend zone trend line, we still have bullish harami pattern. This is the red long candlestick, and the small white one. These are forming the bullish reversal pattern. which coincides with the touch of the lower trend line, meaning the price could potentially bounce off here and try to move higher to the upper trend line, and as I said, potentially break higher. So how would I trade this setup? I would set my entry point somewhere at around 1665, which should be above the current price zone. I would set my stop loss at 1530. This is way conservative and it could be easily touched, but I'm not concerned about holding the stock to say 14, where we see a strong support zone where the price already 3 times in the past it touched it. I'm not willing to hold it long, so I would set my stop loss closer at 1530. This is my entry level, but this is a limit buy order, meaning I'm not entering market orders. I'm setting exact price, and if the price of this stock touches my entry price, then I will enter the position and not before. My take profit first would be incredibly conservative at 1750, meaning this strong support and resistance zone. This means I will either exit my entire position depending on how much I will enter, or I will exit part of it, and then my second take profit zone will be 1830, which should coincide somewhere touching in the future this upper trend line. Potentially I could hold it longer to see if the price breaks through this channel, and in that case the price could easily go to $23, and this could be already a decent trade if you hold it from 16 to 23. This is really decent, but it may take longer, and I'm not sure I'm willing to wait that long for the price to reach. Finally is the HYZN motor stock. HYZN motor recently got hit by a short sale report that caused the price to drop from $9 here. We saw a gap and a huge red candle and another following to stop at $6. This is as simple as it gets. We already had the price touch the zone at 6 and bounce off to 11, and then we're seeing this price come here again. How would I trade this setup? This trade offers a really decent risk reward ratio because you can enter, I will enter at 730, somewhere above this. My stop loss would be set at 1580, so that should be somewhere below this price at 1570, 1580. That would work. My first take profit would be $9. The reason for this is this already served as a support zone, but also when we see a gap, whether it be a gap down or up, the price usually tends to fill out the gap in the coming session. So if the price does push through to 730, we could easily see the price go again to 9 to test this support zone that has now turned resistance. If the price breaks through this, it can easily go to 10, which is my second take profit position. Of course, I may exit half of my position at 9, keep the rest at 10, potentially more, but in that case I would move my stop loss either at break even or I'll move it higher just to lock in some profit and make sure that whatever happens to the stock later, I will enter it at profit. That's it. Thank you for watching. If you enjoyed the video and found it informative and useful, like, share, subscribe, and hit the notification bell so you don't miss my next video. Good luck, traders.